You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again for TWIFO, This Week in Futures Options, the program where we break it all down. What's lighting it up over there at CME on the futures options front, from an underlying, from a vol perspective, from all sorts of fun perspectives. Skew, what's the big hot option that is trading out there? We're going to find it all out this week. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which all you crazy folks are mainlining these days. Go ahead, keep it up. There's more bandwidth where that came from. Remember, if you want more in your lives after TWIFO, you want to come back, let's say after Vol Views, for a little bit of the old options oddities, you wanted to join us, let's say yesterday for an awesome pro Q&A session, or last week when we had Rich Excel coming in to tackle all your questions for a full hour. The folks listening to this show, you love yourselves some FX, some copper, some ag, some all sorts of fun. We dove into all of that on the pro Q&A recently. Only one place to go to get all that fun, theoptionsinsider.com/pro is the place to go to learn more about all of that. As we learn who's joining us on the old TWIFO program today, I am pleased to welcome back on our old friend for his monthly appearance now on TWIFO. It seems like it shakes out that way anyway. Our old friend, Mr. Dan Gramza from Gramza Capital Management. Mr. Dan, welcome back to TWIFO, sir.
Well, thank you very much, Mark. I'm really excited about exploring these markets with you today. There's always something happening in the markets. I've never been bored. When you look at the futures markets, equity markets as well, there's always something percolating. There's always a story out there. So I'm looking forward to exploring these markets with you.
And I'm looking forward to it as well as we kick things off with the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report, the portion of the show where we break down what is lighting it up to the light side and to the dark side. And as you could probably guess, listeners, it is a predominantly dark side biased week this week. I'm looking at the numbers here right now, and we could probably scrape together a top 8. I don't think we can even get a top 10, maybe barely a top 10, but that's really about it. It is all red all the time. Of course, if you've been watching these markets for any portion since our last show, listeners, you know that it's been pretty tumultuous. Certainly in the broad equity space, we've seen a lot of red. We've seen green in the vol space as a result. But you know what? Moving beyond the broad equities, a lot of other asset classes have felt the heat over the course of the past week. Now, Mr. Dan, this is usually where I have you choose where you want to start, to the light side or the dark side. But you know what? I'm mixing it up. So tell you what I'm going to do, Mr. Dan. I'm going to let you do the movers and shakers this week for the underlying. What do you think? You think you can handle that, sir?
Sure. What would you pick then?
Oh, I get to pick
light
that.
side
All right. You know, I'm going to surprise everyone. I'm going to say light side because there's really only 5 of them anyway. So it's not much to pick from this week.
All right. Well, on the light side, we've had some volatility, that's for sure. And if we start with, let's start with number 5, silver. That was up 1.38%. It was number 5 to the light side last week at up 3.63%. Number 4, feeder cattle up 2.1%. Cattle's really a very volatile market. It's an interesting one. Copper, number 3, up 4.71%. Very interesting market in terms of what's happening on the underlying. And that's really a global market. So when you think about copper, you got to think about it in the big picture. Number 2, class 3 milk up 8.11%. Also a market that's got tremendous volatility. If you follow the dairy products at all, that one really rock and rolls. The number 1, rough rice up 13.19%. It was number 2 to the light side last week at up 4.14%. What's interesting about rice is how it's behaving just over the last few weeks. It's, again, a global market. You know, some markets you look at are regional, but we also have some markets here on this list that have tremendous volatility that are a global product. Let's take a look at the dark side. What do we have there? Well, number 5, if we look at the top 5, we have the E-mini NASDAQ 100. That's down 5.04%. But boy, the indexes are really an interesting play in terms of what's been happening in them and what's been driving that sector. Number 4, consumer discretionary sector, down 5.09%. You know, consumer is really a big deal. You know, we have a sector devoted towards it. And we spend a lot of time looking at consumer spending and consumer attitudes in a sense, and what's happening with housing. And all that goes back to the consumer because we're so concerned about them because they're 70% of our GDP. Number 3, real estate sector. That's another biggie. That's down 5.28%. And what's interesting about it is we're talking about consumers, and the real estate sector becomes important because are people willing to spend money? And we can think about it on the short side with retail sales, which we had earlier this week, and also on the long point of view, are people willing to make a commitment to a long-term capital investment? And for most people, it's the largest investment they're going to have. And that's down. What does that tell us? Interesting, isn't it? Number 2, technology sector. That's down 5.77%. And boy, we think about technology, we got to think about NVIDIA. We got to think about earnings coming out. A lot happening in that area that has really increased, I think, the market sensitivity to that sector. Number 1, Bitcoin. down 11.32%. Well, Bitcoin also has an interesting story, and I think it marches to the beat of its own drum. A lot of people think it's really a substitute for gold. Well, if you look at the last couple months, it kind of was. But if you look at the last few weeks, they're also doing something totally different. The drivers behind those two is perception. And I think Bitcoin, well, with Bitcoin, we could see a lot more volatility coming down the road. So those are the top 5 for the dark side.
Kind of contradictory, isn't it? The top 5 for the dark side. It's the bottom 5, really.
Yeah, you're right.
Intriguing stuff. You know, it's surprising, Dan, too. What's the product that's been dominating the headlines, it seems like, ever since last week? It's been all crude, right? Crude, especially given what was going on over the weekend. Whenever there's unrest in the Middle East, everyone's talking about crude. And yet, maybe just because it is so dark side heavy this week, it shows you how much of a sell-off you had to make it into the bottom 5, because crude is off 2.25%. It's only at number 21, Dan. It doesn't even make it anywhere close to the bottom 5 this week.
Excellent point, Mark. You're right. You would think that'd be on the top of our list here, or the bottom of the list, one way or the other, because of the expected volatility. But, we just really haven't seen it.
Yeah, a fascinating product to watch of late, Mr. Dan. All right, well done, Mr. Dan. I will now give your voice a rest as I sub in here. I tag in for a little bit of the old CVOL. Of course, listeners, welcome to the CVOL movers and shakers. What is lighting it up to the light side and to the dark side from a volatility perspective over there at CME Group this week? Let's find out, shall we? And usually we have enough to make a top and a bottom, a light and a dark side 5, if you will, on the show every week. This week, I have to admit, this is the first time I've ever seen the data lining up this way, where it's pretty much all dark side, with the exception of one. This is certainly a first for me on the CVOL front. You might be asking yourself, what is that one vol gainer this week where everything else is moving to the dark side this week? It is Chicago wheat at a 30.68, up a whopping 0.2 of a point. And then that is it, listeners. That is it for any names that are gaining volatility this week over there at CME Group. It is all dark side the rest of the way. The bottom of our list, of course, coming in at 3-month SOFR at 100.85, off nearly 5.25 points. That is followed by silver at a 35.65, off about 2.5 points. Gold at an 1884, off 2.05 points. Metals, so the aggregate CVOL metal index, listeners, at a 20.76, off 1.92. And coming in at number 5 on our dark side list this week, listeners, it is natural gas at 63.15, off 1.75 points. Dan, I've been crunching this CVOL data for a while. I have never seen it line up like this before. You've been crunching the data in these markets for even longer, sir. I'm curious, what are your thoughts? Have you ever seen anything like this before?
Well, no. And it's very interesting, Mark. And I guess what's going through my mind as you were presenting that is, what is it telling us? What I find fascinating about this unusual situation is that maybe it's giving us a warning. Maybe it's an inside look at something that is coming down the road. In other words, is it something that you and I should be paying attention to as we follow these markets? Does it mean we change our strategy? No, but I think it makes us more sensitive. Maybe we tighten our stop if we're trading the outright, or maybe we adjust our option positions because we are seeing a change in market behavior. So I'm with you. I think this is totally unusual, but I also think it's worth paying attention to and something to monitor as we go forward over time for these markets.
Well said, sir. But Dan, you know what? We threw you a curveball. I'll let you make up for it now, sir, listeners. Where do you think we should start our journey this week?
Well, how about... I guess what I've been thinking, Mark, as you've gone through these, what goes through my mind is, okay, what is it telling us about the marketplace? What is it telling us about these complexes? What would it tell us in terms of strategy that we want to take advantage of this? If I think about, well, let's do that. I was going to say, I think about silver, for example. The bias for metals and gold is really to the upside. But if you look at these vol numbers, it tells us something about being cautious.
All right, to the metals we go, Mr. Dan.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, you just heard us break it down there on the CVOL. Some of the biggest vol losers of the week were in the metals complex. Of course, on our underlying movers and shakers, we also had metals pretty active as well, with number 3, copper up 4.71%, and number 5 there, listeners, our old friend silver up 1.38% out there. So, Mr. Dan, I think it makes sense to start in the metals. You were just talking about silver. I think we'll get there. We've been talking a lot about silver of late, but something else you mentioned earlier, which kind of caught my ear and has been an intriguing product to talk about of late, is copper. Like I mentioned, it's number 3 this week. This used to be kind of a sleepy product from an options perspective. Didn't really put up a lot of paper. This week, I'm looking at it right now, listeners, almost 90,000 contracts on the tape for copper. So copper looking robust, however you want to slice it, from a volume perspective, certainly from an underlying perspective, up another nearly 4% this week, coming in at a 442 in that front future. Dan, I know copper has been catching your eye as well these days. What's lighting up your tape out there, and what are your thoughts on everything going on in the world of copper, sir?
Well, it's a very orderly market. If you go back to like the middle of February, for example, we've had a rally. I should say before I begin that, what I typically look for is what is the typical stretch of a market before it backs off. And if we think about what we see here in silver or copper, we see a rally. It goes from imbalance to balance, imbalance to balance. That's the rhythm we have seen since the middle of February. And what makes me leery of it are the fundamentals. They don't fit together. The price action and the fundamentals, I don't think, are a healthy mixture. And the reason I say that, then that makes me cautious. So if you and I want to be aggressive on the long side, I want a relatively tight stop, because when I look at the way it's coming together, fundamentally, it's not. And here's where the big piece comes in. Excuse me. It's China. China consumes almost 50% of copper globally. The second piece that's interesting with China is China smelts, it processes copper about 47% of global supply. Now, then if that's the case, and it's such a big demand component of this market, do we have that? Do we have demand coming from China? Well, recently we started to see some positive economic fundamentals coming out of the country. Okay. And then we also know that China said, this doggone real estate sector is really causing some problems. We're going to put 1 trillion yuan into the real estate sector in 2024. How much of that's really happened so far, I'm not so sure. The other part, and the reason I picked that sector, is because when they build, they use copper. They use copper pipes and wiring just like we do here. So in the United States, 400 to 600 pounds of copper is used in a new home. So when we look at housing permits, like we saw yesterday, housing starts, they become important numbers when it comes back to copper. Okay, but going back to China, right now, we're seeing a mixture when it comes to demand. But where we're seeing demand coming into play are from the smelters, the processors of copper in China. And in that area, there's some demand building, and it's a part of what we're seeing right now. And it's one of the reasons it's on the top of the list or near the top, because we've seen the last 2 days evidence buyers are coming in to that market. So if we look at it from a broad point of view, copper, excuse me, has a bullish bias to it. It would imply another run in that market. Now, if that's true, that means by the middle of next week, we want to see this closing above 450. If we see that, well, we got another trend, that imbalance phase to that market. If we do not, then I'd look for that balanced phase, a sideways move. And when we see a sideways move, we know that can be an opportunity to sell premium. If we have a directional bias, well, we have a whole list of strategies we can look at to take care of that vertical move, like vertical spreads. So copper is an interesting market to me. So I do see it on the bullish side right now, but I'm cautious. And I'm cautious because of those Chinese fundamentals I don't think are totally adding up to what we're seeing here price-wise for copper.
Let's see what we are seeing out there from an options action perspective out here, Mr. Dan. Like we said, out of a 442 in that front future there, and nearly 90,000 contracts on the tape. Of that, about 30% going up in the May contract that has about 7 days to go. So some near-dated paper going up out here in copper. And of that, it is the 410, the 4.1 calls that are leading the dance. You know, actually, as I say that, listeners, when I scroll down here, sometimes you have to scroll to not bury the lead. If we go all the way out to June, we can find a little bit more action out here in the 440 calls, the 4.4 calls this week. These have about 40 days to go, and they went up nearly 9,000 times. So fully 10% of the paper out here this week going up in these 440 calls out here in June, which is, again, kind of fascinating out here. And also interesting for the fact that so many products we talk about, it's all about 0 day and the front week. Going out to June is refreshing. The 440 calls going up, like I said, nearly 9,000 times. 3,200 of those on Tuesday, opening there. 34, almost 3,500 on Wednesday, again opening. And then 2,200 going up today against an OI of nearly 7,000. So a lot of paper on the tape, probably opening again today if past his prologue. Makes some sense kind of piling into these 440s. It also makes sense when you go back and see what the other paper that's been lighting it up this week that we were going to talk about as well here in the 410 calls in May, which again, that's where about 30% of the paper went up this week. What is the volume? Might be asking right now in 7 day to go copper. It's about 25, up nearly 3 points. Again, that's just since Monday. If you go back to the end of the show on Thursday, a bit of a different story. Skew-wise, 5.9% cheap were the puts last week, 4.5% cheap this week. The calls, 8.2% bid. Because it is a metal, got to bid the calls, listeners. This week coming in a little bit, 6.7% bid. And we have about 4,000 of the 410 calls going up this week. Looks like mostly closing. So about 1,700 going up on Tuesday, 1,100 on Wednesday, and about 1,100 today against an OI of 3,300. So people bailing on these 410 calls as copper breaks through it all the way up to 442. That makes some sense. I can also see an argument maybe they're bailing on those and then rolling out to the May, which is maybe why it's opening there in May. Could be some of that action going on as well. Closing on the 410s, rolling out to the June 440s. Those are now pretty much in the money calls as well, but intriguing stuff nonetheless. So a little bit of near dated rolling action. If we go beyond that, listeners, let's see if we can find any other interesting and or aberrant prints. 430 puts also in May going up 2,500 times. The big day yesterday, 1,300 and about 1,100 today. Looks like opening on both sides there today. Let's scroll around a little bit, see if we see any other interesting and or aberrant paper before we get out to another of the metals that we all know you folks are fixated on these days. Going back out to June, the 4.5 calls going up this week about 2,300 times. Doesn't seem like there was much roll action because A, we were opening on the 440s, and B, the size obviously doesn't line up 1-to-1. The biggest day on the 4.5s is actually today, nearly 1,000 going up today against an OI of 2,800, 600 yesterday, 400 on Monday, and a few hundred on Tuesday. So it seems like folks opening on the 4.5s in June as well. If you go a little bit farther out, we go all the way out to October. We've got the 5.5s going up almost 2,100 times this week, listeners, in October. So these have quite a ways to go, about 160 days. Looks like it was a 4 3/4 5.5 vertical that went up 2,067 times on Monday, opening on both. So a little bit of upside vertical action. Interesting stuff. By the way, the future all the way out there, listeners, is at almost a 4.5. So 4 3/4, 5.5, not quite as out of the money as perhaps you might think. So there you go, Mr. Dan. There's our rundown for some copper action. But I know you're also angling to sink your teeth into a little bit of the shiny stuff as well. So by the way, listeners, head on over to that drop down, cmegroup.com/TWIFO. We were just hanging out in the base metals, which is copper. We're going to pop up one now to go precious. Go to the shiny stuff, which is silver. Of course, silver been on quite the rampage of late, listeners, and continuing that, if ever so slightly, this week as well. Up about a nickel this week. Of course, if you go back to the end of our show last week, we're still up about 1.4%. Trading right around 28 3/8 right now in that front future. Don't hear that too often, 3/8 out there, listeners. And again, decent paper out here, 66,000. Not quite as active as it has been the last couple of weeks. Copper actually outpacing it this week. But intriguing stuff. Dan, I haven't had a chance to really check in with you since this silver upside move really began. What's been catching your eye out there in silver of late, sir?
Well, first, I as we were talking about silver, just a quick thought on copper. I love what you do, Mark, because what you told us about copper, to me, fits the price action that we're seeing. That 430, that's a swing low, and we see puts there. As we look at the outlook for a further movement, that 450 is not maybe an unrealistic number for that market. It's a matter of when do we get there. So thank you for going through that. I just love the picture that you create around what I look at in a chart. Well, when it comes to silver, it's a market that's really been struggling. It hasn't moved up, yes, no doubt about it. But all right, let's think about what are some of the drivers for silver. Well, fundamentally, it does have an industrial component that comes along with this. But if we think about, and that's not really showing to be significant right now for that market. Well, when I think of silver or we think of gold, I call these excuse markets. When we were looking at copper, we were looking at supply, demand, some fundamental drivers. These two markets, in silver in particular, is a market that needs an excuse to do something, I feel. High inflation. Well, inflation's kind of stuck where it is, it seems. It's a little sticky. A weaker dollar. Well, the dollar has been fairly strong right now, and some countries are starting to complain about that. So that's not a driver. Then what is it? And part of that is outlook. What do people feel about going forward? Is it a rosy picture, or people feeling that it could be a rocky road? And silver is a market that's worth paying attention to. People usually don't think of it this way, but it can lead what you see in the gold market. Doesn't always happen that way. Over the last few months, gold by far has been leading what we see in silver. But it's something to keep in mind that this market can really rock and roll in terms of leading the precious metals. but we don't see that now. And what's interesting, if you get above $29, we got there a few days ago, about 5 days ago. It sold off once it got up there. And we saw what we're seeing now over the last 4 days is the market is selling the rally. They're buying the break. So we're seeing what I would call shadows or wicks on the bottom of these candles on a daily chart. So it means that they're buying the break. And then once it rallies, so around $28, they're buying it. And around above $29 and near that level, they're selling it. So $28.70 to $29, they're a seller. And the result is we're seeing a sideways move. So they're selling the rally, buying the break. And typically, remember, Mark, like on the floor, they'd always say first time up is a fade, second time's a go with. Well, here we're seeing the market being faded between 28.70 and 29, but we're not seeing those new highs. We're not seeing a market that has the paper to drive it. You know, the expectation for copper is the magic 30 right now, and we're not near that. But I think it's important to pay attention around $29 and also $28. We're basically in a dollar-ranged market over the last 6-7 days. So is that a time to sell premium? Is it a time that if we go directional, if you go directional within 5 days of establishing a position, if it's not moving favorably up or down, I personally would give it the big adios and stand aside, because it should pay you for that trade is the way I feel about it. So silver is actually kind of an interesting market price-wise.
Let's see if it's an interesting market from an options action perspective. Listen, like we said, about 28 3/8 in that front future. Decent week this week, 66,000. We've seen it higher of late. Copper actually outpacing it this week, which is kind of interesting. And looks like, Dan, the big print this week is to the downside. In particular, it is the 24 puts out there in July, future in July at about 28 2/3 roughly. So the 24 puts, I don't know, decently out of the money, going up 5,200 times. Does that concern you, Mr. Dan, that we're seeing a lot of put activity out here in silver?
I don't understand that, actually, Mark. Not 24s. Well, if you look at it, what is reasonable around 24.5 is a swing low. And if we break through that, that means this market's in a downtrend. So if we would get there, it says a lot about what's happening in that market. But to me, from what we've seen, I don't know. That's kind of what I think of as a donation market right now. I don't see those coming into in the money or any kind of payment back for those. But depending on why they're doing it, right? If I'm selling premium to put that in my pocket, that may not be a bad trade. I just don't see it price-wise in terms of current price movement to support that. So yes, that does surprise me.
I was looking here while you were talking, Dan, in the block trades here, and it looks like at least some of it went up as a butterfly. They bought 1,000 of the 26 puts. Again, these are in July, listeners. They paid 34 cents for those. Sold 2,000 of the 24 puts, so you're collecting 18 cents there, so about half your money back. And then they bought 1,000 more of the 22 puts, so 1 by 2 by 1. Does that float your boat a little bit more, Dan? The 26, 24, 22, at least they're only getting it off for, about 20 cents or so.
Yeah, exactly. Now that makes more sense in terms of structure. I don't understand that trade, though, based upon what we're looking at price-wise. But that does make more sense. You added more pieces to the puzzle there.
I'm looking here. Look at a total now of 4,000 of the 24 puts have traded today. So they've done another 2,000. I don't see anything else on the other two legs. There's still 1,000 only there. So If they're doing a fly, they're doing a really funky one. They're doing it 1x4 by 1, Dan.
Yeah.
So I guess
And
they want to do it for it's almost a credit at that point because it's 34 cents, 36 cents, and then they buy 2, so it's a no money outlay. Do you like it better at that? I don't know.
Yeah. I do in a sense. And what's the expiration on those?
These are July, Dan, so they have about 68 days to go.
Interesting. Very interesting. Yeah, it's not something that personally would be of interest to me. But then if you think about what is the cost to put it on and what is your outlook, maybe that does fit. You are adding some pieces to the puzzle, so that helps. But
what's the old saying, Dan? If you liked it 1x2, you got to love it 1x4, right?
Yeah, you're right.
That's what all the best traders say, right?
Yeah, I guess so. And they got a lot of time. They're paying for July's, so who knows? Maybe the world will fall apart and we'll be at 22 by the end of the quarter or something.
Well, if the world falls apart, listeners, where will Bitcoin be? I guess we'll find out. A little bit of the old crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, welcome to the wonderful world of crypto. Remember, if you want to deep dive into all things crypto derivatives, check out our crypto rundown program on the network that records every Monday after our option block program, where we do, as the name implies, a deep dive into all things crypto derivatives. Coming in the start of the show here, we're seeing Bitcoin obviously well off its highs at about a 63,000 right now, 63,250. That puts it off about almost 4,000 handles just since Monday. Obviously, you go back to the end of our show last week, even more. That's surprising a lot of people, Dan, because, of course, the much ballyhooed halving in Bitcoin is imminent, and people are freaking out. How can it be selling off if there's a halving coming? So a lot of people are freaking out about that. If you expected to see that, unfortunately, reflected here in the big Bitcoin options here at CME, the answer is no, unless you count about 1,000 contracts as being an active week, in which case you are very excited, including the big dog this week, listeners. We're at, I said, about a 63,250. It's the 60,000 puts going away in about a week, doing a whopping 58 contracts this week, listeners. 52 of them on Wednesday, and that was pretty much it. So that was the big dog out here this week. So unfortunately, not lighting it up out there. Let's jump ship really quickly to see if we can find any action in the products that you folks are a little bit more inclined towards, a little bit more bite-sized. Of course, we're talking about the micros out here, listeners. Were they lighting it up out here this week? The answer is, I guess, 1,500 micros. Is that lighting it up in your parlance? Well, if that is, then you should be excited right now because, again, 1,500 of those going up. The big dog of these 121 of the 72,000 calls that are expiring in less than a day. So, spoiler alert, if past is prologue, people were probably buying those, in which case they unfortunately are not going to work out. Looks like we also got some 60,000 puts going up this week, 125 of those as well. Those go away in about 6 days. Those obviously have a little bit better chance at fruition. Again, if past is prologue, probably buying. They bought 100 of them, or they should say they traded 100 of them on Wednesday. 25 today. Again, a total of 125 on the week opening, obviously. So intriguing stuff. Dan, I wish there was a lot more volume to analyze out here, but it doesn't sound like that's stopping you from crunching the data on all things Bitcoin, sir. What's been catching your eye out there of late?
Well, I wish there was too. Mark, because it's a great way if somebody wants to trade that market to do that, and that's with options. But so far, that doesn't really gather gain the steam that you'd want to see in a market that's matured, and it's still in that growth phase, obviously. But the numbers you're saying there, that 60,000, that was basically yesterday's low, and I could see where that would attract some puts, for example. The 72 calls, that's got a ways to get up there. But if we look at that, if we look at from March to where we are, the last month and a half or so, it's really been a 60,000 to 74,000, 75,000 market. We've been a sideways move when it's hit those two parameters, and we really haven't gotten outside of it. We don't see anything consistent in this market. And what I mean by that is that from the way I look at this, I look at behavior, and I use candles, Japanese candles, but I think of it in terms of what are the clues. I think of it more in terms of order flow than I do patterns and things like that. So if you look at a chart of that, you're going to see some green candles, for example, which imply higher close, which imply buying from my point of view. But you don't see multiple candles, green candles. You haven't seen that since, again, back in March. So what it tells us is that buyers come in, there's no follow through, because the next candle is going to be red, which implies selling. And that's the challenge. Yesterday, red candle. Today, green candle. It's what I call an equal and opposite, represents rejection of that 60,000 level. But do we get follow through? Follow through in this market would be a close above 66,000. And you'd want to see that by the close of Monday. If we don't get that, then I'd look for a sideways move to continue. And if there was more option paper, maybe there would be some opportunities to sell some premium, actually. But right now, this is at a level that we've seen buyers before. And when I say before, back in the 5th of March, the 20th of March, at these levels, we found buyers. And today, we found buyers coming right back into the market. And when we did, by the way, afterwards, we approached that 72,000 to 74,000 levels. So we did get some follow through back to the upside. If that's true, when it happened before, it took 4 to 5 days to do that. So that would mean by the end of next week, we should be back towards that 70,000 if it has that same kind of rhythm. But it's 50-50 because of that inconsistency we've had in terms of market movement. So can these buyers follow through? That will be the issue. Can they get the job done? And it should be done within this next week, if indeed buyers are here. So from my point of view, if it doesn't give us that kind of movement next week, I'd give it the big adios and stand aside on that as well, because it's just not performing to what we're looking for. So it's really, and Mark, what fascinates me about this, we think about the other markets that you and I looked at, and we think about this one. All right, what are the fundamentals? People say it was highly correlated to gold. It was when they both were moving up, and not so much now. What's behind Bitcoin? What's the fundamental of that? Supply demand? Not really. What is it? Inflation? Is it a guard? Is it a store of value? Some people would say yes. Some people say it acts like a currency. Is it correlated to the dollar? That doesn't seem to be consistent. My point is, it's intent. It's perception. It's what people think it should be. That's what drives this market, not the fundamentals. And from my point of view, when you have a futures market, we know there's regulation. If you trade in the cash market, there's nothing protecting you. So if you got a problem, who are you going to go to? Here, You got a problem, you got a broker, you got an exchange, you got regulators, you got a way of protecting that investment. The big shot in the arm here for Bitcoin was when they approved the Bitcoin ETF. And there were so many sponsors lined up to get that approval. That added that ability to not only trade it, another regulated market, but for market makers, the big deal was they can now do spreads in between those two. They have a way of hedging themselves if they're going to be a market maker in this market. That was kind of a game changer. But so far, it just doesn't seem like it's bled through the market to give us that consistency that we're looking for between those products. So it'll be interesting to see how it moves in the future. Just one last thought. When I hear people talking about this, and we're at, let's say, at 60, there is so many people are saying 100. It's going to be at 100. Now you have people in this range not wanting to miss the train, right? They're going to trade it because they believe this could be a strong market. Yeah, but also because everybody else is trading it and they don't want to miss it. So there's that anxiety trade that comes along with this as well. So it's interesting, and today's interesting. Now, Friday, does this market close near that 66,000? Ooh, if it does, it means people are willing to go home long Bitcoin. So tomorrow's close could be interesting because it is a Friday, and will they hold it into the weekend?
And as we're coming up against it here, listeners, we got a little bit of time left. I know Dan's been watching this product. I know a lot of you have been watching it as well. Has it been lighting up the tape? I guess we'll find out as we head on into a little bit of energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the wonderful world of energy. Let's go into that drop down one final time. Pop out of crypto. We're going to go down one slot to energy. Usually we might stop in nat gas. This time, no. Everyone's obsessed with crude these days. So to the world of crude oil, we go in the product family, and then on product, obviously, WTI. And as we kick it off, is it a banger week? You know, we weren't seeing WTI lighting it up on the movers and shakers because, like we said, it needed to be quite apocalyptic to make it into the bottom 5 this week. It was only number 21. Wasn't there on the vol side, but if we had a volume mover and shaker, WTI would certainly be there. 720,000 contracts on the tape already. So yeah, that's a pretty hot week, especially when we normally would expect 400 to 450, somewhere in that range for an average week out here in WTI. So a pretty hot week. Go figure. Whenever there's unrest in the Middle East, it does tend to lead to a little bit of volume and a little bit of action out here in WTI. Right now, WTI coming off of its recent highs at about an 82.16 as we're coming into the start of this segment, off nearly 3 points, about 292 since Monday, or about 3.43%. Like I said, if you go back to the end of the show last week, it's off about 2.25% or somewhere in that range. But a pretty action-packed week. And of that, listeners, about 47% going up in the June contract that has about 28 days to go out here. By the way, if you're wondering, what is the vol right now? In WTI, it's at about a 27.5, off about exactly almost 2 points, about 1.9 points on the week. So still pretty frothy, obviously, when you compare it to a lot of the products we're going to talk about out here, but also giving up nearly 2 points on the week. Kind of keeping that trend alive of vol just coming off across the board. And all the products we're looking at here this week, Dan, kind of amazing. The skew last week in June, puts were 2% cheap. This week, about 4% cheap. So maybe we're starting to see the worm turn and be bottoming out here. Who knows? And then the calls last week, 4.7% bid. This week, nearly 10% bid. So Dan, the puts are offered, the calls are bid in June. That means WTI is turning around, right, sir?
Well, it sure looks like it wants to, huh? And people are planning on that, the way that seems to work out on that regard. But does the price support that? The price action that we're seeing, in that market. And you would think it'd be a lot higher right now than where it is. You would think not 82, you would think 88 or $89, which is where a lot of the Middle East wants to see this market trading. $70 is kind of the bottom line for many countries that participate in OPEC. But so where we are is a comfortable level for some of those people. But what is it that's causing this thing to back off a bit? I mean, we have about 2 million barrels a day taken off the market with OPEC plus. And we also have some countries after the last OPEC meeting that everybody said, okay, here's what we're going to stick to when it comes to production levels. Well, when they got home, their own economic situation says, I can't do that. I can't cut back on the production levels that I had. So they are producing. So even though we've had production taken off, we're not really seeing the market responding to it. And then we have, as you pointed out, we have the global unrest situation. We have the crazy things going on that Israel's trying to deal with, and what's happening with Iran, and what does that do for the ability for the crude oil production to stay in place? Is it going to have an impact? To put that in perspective, globally, the world uses about over 100 million barrels a day of oil. We in the United States consume about 25% of that. And there's only 3 countries that can produce in double digits per day: the United States, Saudi Arabia, Russia. That means people that can produce, countries that can produce more than 10 million barrels a day. We're around 13 million barrels a day. Saudi Arabia has the ability to get near 13, Russia less than that. And we've seen them cut back a bit. And where we are now compared to where we were just a few months ago, there has been some impact. Back in February, we were in the 70s, below 75. So yes, there has been some impact, but it's not responding the way you would think it would with these fundamentals out there. And that's what I find interesting. If you look at yesterday's action, it fell out of bed. It was, from a price point of view, beautiful. It took out the previous lows that we had, nice, decent, clean close. And today we'd look for a rest day. In other words, it's got to catch its breath. Yesterday was a sprint. Today it catches its breath. That's what we're seeing. It also implies a possibility of going out the end of this week with a higher close. And a higher close would be something in the range of around $83.80 to $84. That would be an ideal move going into the weekend that you'd want to see in this market. The real challenge over the next few weeks, though, is can this market get above those previous highs, which is around $87.05, 10 cents, right in that range. So if we can do that within the next week, now we're talking about next Friday, then we have a chance for a stronger rally. I think without that, look for a sideways move in that, $87 to $82 range. We could be here for a while. One other thing to look at, and that is the U.S. dollar. The U.S. dollar, since it trades in dollars, has an impact here. The stronger the U.S. dollars, we'll see that typically put some downward pressure on crude oil prices. It's one of the factors. So keep an eye on the U.S. dollar as we go through next week as well. So those are some thoughts I have about that market.
Dan, as you were talking, I was just looking to see what the price action is here in WTI as we are coming up against it here on the show, listeners. Dan, would you have in your bingo card for this week nearly 30,000 of the June 95 calls? Because that's what was lighting it up this week. That's the big
wow.
including nearly 20,000 today, 19,500 today, 4,800 on Wednesday opening there, 4,000 on Monday also opening. It looks like there could have been maybe some vertical action, but nothing that lines up one-to-one. by any means out here. It looks like, and the 88s were also pretty active, also in June. They were active yesterday on Wednesday, about 15,000 of the 88 calls opening yesterday, and then 5,100 on Tuesday, 4,000 on Monday, 3,400 today. So upside in June is kind of the order of the day. I was just scrolling through the block stand to see if I could find anything kind of leading that dance. Also worth noting of the par calls in September going up about 13,300 times this week. So a lot of upside call action lighting it up. Also, the 95 is going up in July, nearly 9,000 times this week. So I guess, listeners, it could be a lot of overriding here, but I was trying to scroll through the blocks to see if I found any clues as to what they were up to. I didn't see that, but I did see some funky trades, including, it looks like some folks liking themselves some verticals. Like, listeners, do you like the 90 par vertical going up out here in August? Looks like somebody liked it. They bought it 1,500 times. They paid about $1.34 for that against futures. They sold them at 83.10, so they did it tied. So I don't know, you like that tied against futures, listeners? We also have what looks like people like their flies. Another fly going up. It was the 79, 76, 70 put fly going up this week as well. Went up 500 by 1,000 times out there, listeners. Looks like they did it again for, looks like about 18 cents on this bad boy here. So some interesting trades going up out here in WTI, listeners. Unfortunately, we're coming up against it. That's about all the time we got for the show here, listeners. But before we go, as that music plays us out, listeners, Mr. Dan, if folks want to check out what you have cooking, what can they look forward to, and where should they go to learn more?
Well, I do have that website, dangramza.com. I look at a variety of the markets, 22 different markets, and looking at the price action that we see in those markets, you'll see red and green lines, which represent buy and sell levels. If it's dotted, it means that's a trade that happened earlier in the week. These are not buy and sell recommendations, just ideas that I want to share with you. There's a free video that I do every day there. There's also a course and more advanced videos. But if you've never looked at futures, take a look at those, watch those markets. And one place you can do that is that free video at dangramza.com. And you can go back about 10 years and see how those lines changed and what I was saying previously.
There you go. Check them out, dangramza.com. You also know where to go check out all these reports for yourself, cmegroup.com/TWIFO, TWIFO. If you want to dig deeper into the CVOL, of course, just type CME and then CVOL, CVOL, into your browser. So you too can explore what's moving and shaking on the underlying and indeed on the vol perspective over there at CME Group. That's going to do it for us on the network today. Back again tomorrow, listeners, for a little bit of the old volatility views. Who's going to join us to talk vol? Well, I guess you got to tune in to find out. After that, exclusively for our pro folks, we're back hot and heavy with a little bit of the old options oddities. Then we're off for the weekend. No rest for the wicked, though, because we're back again on Monday with the option block all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.